Good morning, traders. It's Monday, March 4th. Taking a look at the charts, equities are a little bit mixed this morning. We got the NASDAQ flat, SP 500 down about a quarter, the Dow down about 0.5%, the Russell 2000 up about 0.5%. So the markets are a little mixed. Money is flowing into the small cap, the growth stocks. So we are definitely seeing that speculative money still wanting to rotate into the equities market, which is kind of the general public, I think, starting to chase money higher, which to me is a bearish sign for down the road. Things will eventually fizzle out and roll over in a big way. But overall, we are seeing the equities markets had a nice pop there last week. We saw the sidestep to the 5-day moving average. It rallied up and it had a nice 2-day rally there. Now we're flagging here sideways. We'll see if it continues to kind of work its way up the chart and up the 5-day moving average. Overall, if we take a look at the NASDAQ, fairly similar type of price action, a little more choppy, a little more driven, obviously, with tech. And we are seeing that have a nice pop and moves. It's moving sideways here today. When we look at where the money is flowing, we are seeing definitely a big pop in gold. Last week on Friday, we saw a big pop in gold. It's moving up again this morning in pre-market. You can see we are getting pretty close to hitting some, well, depending on the chart, if we look at the futures, we're pretty far from the all-time highs spike here. But if we look at GLD, you can see here we are pushing up and poking to pretty much nominal new highs here in pre-market for GLD, for gold trading during regular trading hours. So we are starting to see gold break out. It is in that bullish phase, in that bull flag pattern. When we look at the precious metal space, we had a big pop and rally on miners. Again, down near this bottom here, this bottom level we've been talking about, how it's getting very oversold. We're entering what I believe is potentially a strong phase here for the precious metal space to come to life for a few weeks or a couple of months, potentially as we head into May. But at this point, it is still in a very strong downtrend. It's had a very strong knee-jerk reaction bounce. As we can see, going back in time, a lot of these big bounces fizzle out and sell off. It has been definitely in a sideways downward channel for a long time. So yes, there is some life coming into the precious metal space, but gold miners are still in a downtrend. They may have just found a short-term bottom. We could see gold miners rally potentially back up to maybe this upper zone here over the next couple of months with the stock market as this becomes a defensive play. But right now it is still under all the key moving averages pretty much and overbought. These red bars here on our short-term momentum chart, this red shaded background is telling us that it is a crowded play. Everybody's piled in. More or less a news-driven move. It's overbought. So we'll see if sellers step in. We saw this happen back over here. And of course, the market sold. We saw the gold miner space fizzle out very quickly. Over 2 weeks, fell almost 12%. So a one-day bounce does not mean there's a trend change. But there's no doubt gold is the clear winner and safe haven play, holding its value while everything else has been struggling and moving lower, including even silver. If we take a look at silver, again, silver has been flatlining, just oscillating around. It has had a nice move. It's moving up today. It is actually starting to make a series of higher lows and some higher highs. So it is starting more or less an uptrend, but it is in this sideways range, this sideways oscillation, and still kind of just trying to change its trend. We can see here it is flipping and flopping from downtrend to neutral to uptrend to downtrend. It is all over the place, and that's what silver is typically like. It's typically pretty wild, giving all kinds of mixed signals, higher highs, lower lows, broadening formations, all kinds of stuff. So we are starting to see some life in the space. It's starting to get interesting, but gold is definitely, I think, the easier, safer play that is in an uptrend and has a very strong bullish chart pattern in terms of, I think, continuing to hold up and move higher. And the miners and silver are still working themselves out, trying to get into an uptrend. If we take a look over at the hot list, we did start to see some commodity space start to move on Friday. OIH, which is the energy space, had a strong pop to the upside. COPEX, which are the copper miners, had a strong pop. They got a nice bullish formation starting to break out here. XME, which is like base metals and some precious metals in there, starting to pop up. So we're definitely seeing life start to move into a bit of the commodity space. And we've seen this over the last several weeks. It's either everybody's in like the fast growth tech companies and dumping these commodity based stocks, or vice versa. So Friday was just a big update on the commodity space. But again, we don't look at a one-day pop as a trend reversal or anything. There needs to be more work done to the charts for that momentum and for time to pass to show that there is a trend under wraps or starting here. Overall, in a nutshell, we continue to see our positions keep moving up and maturing. We have our SSO position is up about 33%. Our QLD position is up about the same, up about 36, 37%. And our XLP position continues to be a very slow mover, but that's what defensive sectors do, continuing to just kind of work itself up and to the right. It does have a little bull flag pattern. We'll see if it will get some traction later this week and keep pushing higher. I think we did hit our first target here, so we have minimized our potential downside. If the markets do want to roll over, we'll get out and lock in those gains. Other than that, if we take a look at the long-term trend, the market continues to scream higher here. It's broken to new all-time highs, and on the weekly chart, it's just kind of trucking its way up and to the right. This is why you don't want to step in front of a freight train and bet against it. It can keep doing this for a long time. It could go on for years. So we don't want to do that. We just want to follow the price and in the markets. And we can see here from the last long-term investment signal, the market is up about 27% from back in early 2023 when the trend went from this downtrend signal and kicked over into the uptrend signal. So we are in a bullish phase, but definitely not a raging bull market. This is really driven by the Nifty 7 or whatever they're calling all the big tech companies doing really most of the heavy lifting, which we can see here in the Russell 2000. Again, if we zoom out on the Russell 2000, it is nowhere near the highs. It is consolidating. It's up at resistance, and it might squeeze up a little bit higher as we see the general masses pile into growth stocks, thinking this is the start of a new major bull market. I think it'll suck in a lot of people and then eventually roll over. But again, we'll just follow the market trends, not try to pick a top or bottom. And it doesn't matter if the market goes against what we think is going to happen. The key is we're following price. And if the price wants to keep going up, we will continue to ride it higher. Other than that, that's about it for now. And we'll talk to you soon. Bye-bye.